are getting ready to trade September week 4, 2020. Getting close to the end of the quarter. We have a full week of September trading ahead of us, and then a couple of more days when we get into the following week, which will be October week 1. So really everything that does trade this week ahead of us will still settle in September and in Q3. So if they want to continue the behavior, the downwards and selling behavior, this would be the week to get it done so that it all lands in the quarter and doesn't go on out, and they can maybe start fresh with a new rally in Q4. So that's a thought about timing. Right now on our roadmap, you can see we have our 10-day simple moving average barreling down towards the 50-day simple moving average, and this is going to cause a more serious sell signal than the one we got here with the 10-day down through the 20-day. In the face of this cross this week that we just traded, we wound up rallying up against this and making a higher high over the previous week on Fed Day. But we slammed into a wall of resistance once again at the 20-day simple moving average and rolled over. And then we closed here on the day of the Fed and then gapped down open the next day all the way down here and rallied back this much, but not enough to fill the gap. So that behavior between the close on the Fed day and the gap down open on Thursday morning is similar to what happened to us in June. And in June, we wound up selling off quite a bit further from that gap down. So let's see if that's similar behavior. Granted, in June, we were hitting a high at that point, a bounce high. We didn't have this sell-off just before us like we do now. But in any case, just wanted to compare those two events together. Above us, like I said, we have that gap to the Fed day close, and until we get through this and fill this gap and close above 33.85, I think we're still vulnerable to lower prices. Below us, we have the final gap left that we made in August, the gap between the August low at 32.84 to the July close at 32.71. As of Friday's low, we pushed down and filled the last gap before hitting this one. We hit 32.92.44 low, and this is just about a perfect 8.25% off of the all-time high. So if we are going to undershoot 10%, this is it. We can't fill this gap. If we are going to go the full Monty, and go all the way to 10% and more than likely overshoot that and go 11 or 12% off, that's going to happen on the filling of this gap because we'll just keep on going lower. When we keep going lower below this gap, we have a line of support and resistance that kind of held us back at the end of July. You can see it down here. Here was the end of July, and here was that gap up open to start the month of August. That line of resistance was 32.51 to 53, and just below that is where we are positive or negative on the year at 32.30.78. When we look at the cleared out daily chart, you see that we are below the halfway back point for the quarter. You can see it on the roadmap too, but you can see it more clearly here. So by closing below this to end the week, this sort of leaves us vulnerable, even though I think we closed below it. This was September 11th here. So we closed below it 2 weeks in a row. So this leaves us vulnerable to reviewing, rewinding all the way back to the low for the quarter. So if we can't hold above the halfway back point and we're going to head back to the low from the quarter, we would break down through that 32.51 and that 32.30 level, and we get into this band of levels in here. At 11% off the all-time high, we're at 31.93. 11% up on the year was where we marked our all-time high. So that could be an instance where we just dip our toe below 3,200 and reverse. If that's all that they want to do, then that's what's going to happen. If they want to go the full distance and test closer to the low of the quarter, you can see that the 200-day simple moving average is rising right in there. There was also, just as there was 32.51 resistance in July, in June there was 31.51 resistance. So we had an instance where we kept coming up against that 50 handle every time we turned over the odometer to a new large handle on the S&P 500. We would get hung up trying to get through the 50 handle. So this could be support that holds us above the 200-day, but if we go the full distance to fully backtest the low for the quarter, and that is with continued closes below the halfway back, then we've also got the 200-day right there. And if we're losing the 50-day, it just seems like a logical sort of magic pull that will get us right down there to the 200-day simple moving average. Okay, but I just want you to be cautious if we were to get below 3,200, just be cautious because we could reverse either at 31.93 or around 31.50, okay? Here is our monthly chart. This is really compelling. In order to fill that gap between August and July, if we were to drop down below the July low, you can see we would go bearish engulfing on the monthly time frame. And we haven't seen something like that happen since back here and back here. This was February, and this was that huge August sell-off that happened last summer. So this is really bad news. We would go bearish engulfing, and you can see that if we just got in there just to try and fill that gap, it would put us in such a state that we might just slice right down through filling that gap and go right towards that 3,200 flat and into that 3,100 handle very easily. And finally, let's take one look at the VIX. These are the VIX futures. You can see, even though we've been selling off for the last 3 days on the market, the VIX has also been heading down. Now, if we had been rallying and we saw 3 days heading down on the VIX, that would be bullish, but we are selling off and the VIX is going down. So that is counterintuitive to a sell-off. Maybe this is just an anomaly. Also, you can see that the 10-day is ready to cross over down through the 200-day on the VIX. If this was a stock chart right now, you'd be looking at this and you'd be agreeing with me. I think that this is a very bearish looking chart. Well, if we're going to sell off all the way down 3,100, we have to have a bullish looking VIX. So we have to see the VIX come out, hold above VIX futures, that is, hold above 30, and we want to see it progress back up towards 37, where it topped out on this spike that we had at the beginning of September. And you can see it, just as I was just saying, here was the end of August. Here you saw the VIX, the VIX moving up, and finally here was the day that we set our all-time high on the S&P, and then we had a huge spike on the VIX on September 2nd when we made our all-time high, and then our first day of sell-off, we had a spike even higher. This was on that Friday of September, week 1. But then, we have been selling off and the VIX has been moving down, so maybe I'm worrying about nothing here, but it's just something to think about. If you like to use VIX futures like I do, as an outside indicator on the way things are going on the market, you want to make sure and see that the VIX is still above 30 if you're going to keep continuing to buy puts. Okay, have a great rest of your weekend. I hope this video helped you out, gave you a clear sense of what's going on and what's happening ahead of us come Monday. Have a great rest of your weekend. Good luck and good trading.